Good evening, friends. Welcome to my channel, Smart Index Edge. Narnakshi Swami here. Today in Nifty, it was an expiry day, monthly expiry day. While I was seeing the price action, I felt demands have entered into the market. So it was a roller coaster ride. Markets rallied within, 10-5. That is 45 minutes to the top from bottom of 52 rupees to 204 rupees, and then it swiftly fell to the bottom of 1050. So within 1.5 hours, the market was on a roller coaster ride. So probably many would have lost money, many would have panicked, many would have not found out what to do. They might have done wrong things. See, they might have bought and they might have sold. The call buyers have been smashed and also put buyers also smashed. So I thought, see, let me shift this to this picture. This picture actually made me, this structure mapping made me to stay cool and take the trade without any panic. Even though it was a demonic activity in the market. So it was like I felt big money were throwing you up and down like that. It was like that actually. So panic, so swift. The movement was so swift, and within fraction of a second, your money was gone. I was watching this and I thought, why not? See, if you were in this scenario, you wouldn't have traded properly. If you would have made this picture in this way, you would have traded properly. So I thought, let me go for the study material and teach you something so that you can trade properly. Let me come to my PPT. I'll ask what is price action. So you have to learn this basic foundation. If you learn the basic foundation to trading, you will understand the market structure and also advanced price action. So I'm asking you, what is price action? Let me slide show it. So price action is nothing but people coming together, agreeing on massive scale and many, that is called as volume. And it is constant decision process of what is cheap and what is expensive. So some people will buy, some people will sell. If it becomes expensive, they will sell. Sellers will come into the market. If it becomes cheap, buyers will come into the market. So it is a constant battle between buyers and sellers. It is nothing else. Price action is nothing else. It is a constant battle between the buyers and sellers. So it is a constant decision process about cheap and expensive. So in this market, whether it is expensive or cheap, we should find strong highs and strong lows, strong low and weak high. You should find those things. If you find those strong highs and strong lows, so you can trade better. And the weak highs, if you know the weak highs, you can trade better. Because in trending market, in an uptrend, actually, weak highs will give away to another next higher high. So strong high is a high that has broken the structure. Broken the structure means the market start its downtrend and has created new confirmed lower low. Thus, it creates a lower high. So in this picture, see, you can clearly see, I have taken the example of Kotak Bank. So constantly, you can see the market was in a range. I don't know how many years it was in a range. Today, the big player has broken the structure. It has made a lower low. So this is a weak low. These are all weak lows. They have been captured. So today, the big player was able to push the market down and it has broken the structure which has formed over the years. It might be more than 3 to 4 years. It has undergone consolidation. Today, it was broken. So this is how you need to find the strong high and weak low. So these are all the weak lows. Now this level becomes in the Kotak Bank at present becomes a strong high. It is on the daily time frame. It also matters on the different time frames. On the daily time frame, it has shown this. The structure has been broken. So now it is confirmed that it is undergoing through downtrend. Till this time, till today, it was actually, it made a low, bounced off, made a low, bounced off, made a low, bounce off. But in this area, you can clearly observe it was making lower highs. And this push was, again, it was a lower high. And as today's something about RBI restriction, that news, because of that news, the market, it collapsed and they were able to push the price breaking below all these lows. They have become weak lows and it has made a lower. So it has started its downtrend. Now there may be some sort of uptrend in this reversal in this market. Again, it will create a lower highs. So that's how you need to find the strong highs, lows, strong highs and bar, strong lows and strong low and weak high. That is very, very important while knowing the market structure. So strong low, what is strong low? Strong low is the low which has broken to the upside and created confirmed new higher high. Here, you can see it has made high, higher low, high, higher low. This one is a strong low. This is the strong low. So it is very important for you people to find the strong low in the market so that you can trade properly. That is very important. Mapping of the market structure is very, very important. And coming to the weak low, it is the low which has not caused any break in the structure and shift in the market structure. It is simply lower low. Again, this is the chart of Kotak Bank. It is low, low, low. It is shift in the market structure. It is lower low. So now another lower high will confirm that it is in a downtrend. This is weak low. This one is weak low and it has broken this low and market has there is shift in the market structure. So you need to find what is the weak low. Trading. So trading is nothing but how to trade. We should trade against bar away from strong structure towards the weak one. That means what? See, when the market is in uptrend, it is making confirmed higher highs and higher lows. Then we have to trade against the higher high towards the higher low so that we can target again. That is a swing trade. Target again to the higher high and also we can conquer that. That is the trading. Actually, you should trade like that. So that for that you should know proper market structure. Strong structure point will cause break of the previous structure. Then it makes strong. Why? Because big financial institutions have entered there. They will try to protect that high or low. For example, in this example, here I've taken the Nifty chart on daily. See, what is made actually, it was making an higher highs and it was a higher low. So it made an high, rallied actually, and suddenly it collapsed actually. It was a panic setting in the market. Almost they came down to this level, 21,765 and 21,716 was the low. So this here market strongly reversed. You can see the piercing pattern. I have made the video for that piercing pattern also. Reversal you can see. And what did they do actually? They protected this low. That means here it becomes the BFI entry is confirmed. So 21,716 became the protected low. So then it started up more. Today, it was after a brief consolidation of 3 days, again, it was an up move. It panicked actually, making a low. But if you would have tracked the market properly, that this dozy low was not breached. So there was a shift in the market structure around this level. I'm not able to tell you precisely about this. You can see this candle was breached. This high was breached to form a dozy candle. There was higher high formation, and the consolidation was it was in a range. So hence we can call that low, strong low, can be called as a protected low, because these big financial institutions will try to protect this low, because if it is breached, they will be under drawdown. They will go under drawdown. So what is our aim? Goal is to find these people, these levels and footprints of these people, and to stay with the big players. The big player confirmation is confirmed by this big piercing pattern, big bullish candle. You can see the difference between this low to this low is hardly 50 points. So they created a panic in the market, pushing the market downwards, confusing all the people, and they did it. So if you are able to map the market properly, market structure, you will not panic. This is what I want to see. You have to identify the strong low. So this is the strong low. And if you are identifying the strong low, because the market has rallied so much, so you should always be aware of this low. If you are aware of this low on higher time frame, so you will not get panicked while trading. So why these big financial institutions are very important? Because they have got more money power. They can simply control and decide what to do. See, those people in a previous slide, you saw how they have pushed the market almost to the downside, panicking the retailer investors and inducing retailers to sell into the market more. And they might have, on that day, on 19th March, they pushed the market to the lower side up to 21,716. But I was watching the overnight market, that GIFT Nifty was below 21,555. So indicating they were creating panic, overnighting, psychology, they were affecting the psychology of the retailers. So their intention is to simply manipulate. They can simply move the market and manipulate. But if you know the footprints of those people, from where the big money has put the money, and if you identify the strong low and the weak highs, and also strong high and the weak lows, then you will not have any problem. So it is an art. It is a very simple thing, but it is not very to say it is very simple thing, but it needs very hard work to identify that. If you start working towards that, definitely you will win in the market. So our goal is to understand how they operate. You have to understand how these big financial institutions operate and simply follow them. Simply follow them. They leave footprints behind their transactions. They have left the footprints. That's what I showed you on that slide of the Nifty. They have left the footprints. See, from the 21,716, almost market today rallied up to 21,600 something, 600 odd. Why? Because that is the big money power. If you would have stayed with them, you would have been profitable. So price action and candlesticks. I'm talking about price action and candlesticks will create footprints. These are the things will create footprints. And market structure is also created by the price action. And market structure, and also you can see some patterns also. Understanding the market structure will put you way ahead of the majority of retail traders. So you have to understand the market structure. It may seem very complicated, but if you start understanding, if you start marking the things properly, then it becomes very simple. It becomes a very simple when you start doing that. Don't confuse with so many indicators. Don't confuse with so many things. Only simple price action, analyzing the simple price action and seeing the market structure will fetch you more money. So here in this chart, see, can you see? I have put only chart without any drawings or anything. Can you understand what is price action? No, you cannot understand what is price action, what it is doing, just some drawings, some candlesticks going up and down. You are seeing some red candles, green candles like that. But in the previous chart becomes meaningful when we identify the supply and demand. See here in this, I made an attempt to mark the structure, what it has done. You can see by applying these lines, you can see identify supply and demand zones, some meaning to this chart. You got the meaning to this chart. From here, you can see, you can follow this dark black color. If you follow the dark black color, market is in downtrend, right? Here, up to this, market was in downtrend. Here, in this area, it was falling. And here, all of a sudden, there was a shift in the market behavior. So it showed some sort of reversal. See, till that, it was making a lower high. Here, it was a lower high and turned into higher high. You can see here, minor structure, you can see here in this area, it made a lower high, and it again here in this price action, you can see higher high. So you should map the market, you should mark the market in this way, so you will get a meaningful picture to the chart or meaningful picture to your price action. So if you are able to find the meaningful picture, or if you can understand what is happening in the market, you will never panic. You will never, trust me, you are not going to panic. So from today onwards, you start doing this. Market structure usually announces it is the strongest foundation of technical analysis. It is the breadth of the market. So structure is breadth of the market. Understanding, simplest, but it is hardest. Concept of higher highs, higher low, lower high, and lower low will contribute to your 80% of profitability. Because, see, this is very simple. Just if you master this, definitely you will be profitable. I'll tell you in the end of the video how I was able to trade today when demands were in the market. So no confusion. You will not have any confusion. You can trade properly if you have a clear idea. Market structure illustrates who is in control. Today, big players were in control till 11 p.m. Later, market calmed down and buyers took the control later in the market. So that's why market rallied from the low to the high of 22,600 odd. So market structure is used to identify trend, major and minor trends. Understanding market structure across different time frame is a whole new skill. You have to develop that. See, different time frames may present market is an uptrend or downtrend. Suppose higher time frame may present market is an uptrend. Lower time frame can present market is in downtrend. So do not confuse that. So it is a new skill. You have to achieve that. So trend identification is how to identify. Trend is formed because market is always in buying condition or selling condition, always up or down. You must be seeing. Actually, what is happening in the market? Yesterday, Dow Jones was up more than 300 points. Now it is down 300 points. So it is a constant action actually in the market. So there is no stillness in the market except in the closed hours. Market does one of the two things. Either it will be trending. Trending means upward or downward. It will be moving upward or downward, or either it will be consolidating. Ranging, that is ranging, choppy type of movement, and some type of unclear picture will be there in the market. So we need to trade in the market when market is in upward trending phase only. We should be in the market trending upward or down. Do not complicate your trade. First thing in the morning, ask yourself what market is doing, whether it is trending up or down or sideways. This is very, very important. You go to the chart, open the chart, and see the chart, what the market is telling you. Read the market, listen to the market. If you listen to the market, market will speak to you. Definitely it will speak to you, so that you try to understand the language of the market. When you master that language, definitely you can understand. Without understanding the language, if you want to trade, you cannot trade properly. Definitely you will be in soup. Market always oscillates between mean value, fear, and greed. See, this is an example of the chart. Market was in a range. It gapped down, created a fear in the market. Fear. People thought all the sellers became active. They thought it will go down. But see, this fear was dominated when it was gapped down. Slowly, when it started coming up, greed has dominated. The people start buying here at the top. They won't buy because fear has dominated psychology. These big players affected the big financial institutions, affected the psychology of the retail traders by taking the market so swiftly to the up and pushing, collapsing the market down to the same level. So definitely nobody will dare to take the position in the market. Retailers will have confusion because the reason is you do not know how to read the market. How to read the market? You do not listen to the market. You do not understand the language of the market. When you start understanding the language of the market, definitely, you are able to understand everything. So try to do that. Uptrend. So how it is defined? As market, it is defined as market structure, breaking the highs and maintaining the lows. Nothing but. See here in this you can see market is making highs and it has started maintaining the lows. 22,007, 22,012, 22,201, 22,262. Here it has maintained the highs. Even though market has gone into the range, again it is the Nifty chart, I'm telling you, and market gap down. If you are able to map the market properly like this, you would not have panicked for this level 22,301. See, when compared to this low 22,282 and 201, 22,301 has maintained the low and this high has been protected. So market rallied, even though there was lot of whipsaws, the market rallied. So this is very important. This is very important to read that. So market structure is uptrend in that, breaking the highs and maintaining them. So just look for whether the price is maintaining the lows. If simple thing, if you start doing that, if it is maintaining the lows, you will not have any panic. In downtrend, just opposite, it will not maintain the lows and it start breaking the lows and it starts making the lower highs. That's it. Always ask, what is my major high and major low? You should always know major high and major low, because major high and major low are created when market structure breaks to the trendy move. That is very important. So consolidation. Coming to the consolidation, so everybody asked what is the range? We cannot make out the range. So consolidation is defined as market structure failing to break either high or low, even by wicking. See, in this example, market had undergone through. This is an example of the Bank Nifty. Many people, I was seeing somebody's video taking a hero zero trade, thinking that it will break. It was market ended up in range. Neither, you can see it was a range. This was the high and this was the low. It has neither broken below this or not gone above that. So this is the consolidation. This is the range. Better not to trade the ranges after identify the ranges in the higher time frame, like 4 hours and daily time frame, and do not trade the ranges in the lower time frames. You will lose money. Spot before every big move. So actually every big move, there will be consolidation. That is the base formation. So in advanced price action, we talk about rally, base, rally, and base, drop, base. So uptrend, we talk about base, drop, base. So in Kotak Bank, you saw the base formation and there was a drop. So it was a downtrend. Now downtrend has started in the market, Kotak Bank in the daily time frame. So after so many years of low, that low, protected low was broken today to the downside. So indicating weakness in the market. So there may be pullbacks, but do not go for investment is not for that type of moment. So you need to identify the market structure properly, and you should, if you start reading the market properly, you can invest in the market in a very wise way. So in this spot before every big move, there will be a base formation, and after there is consolidation, you can see there, and there will be huge liquidity grab will be there. I'll show you with the example, and then you can see the big move. Coming to the next slide, you can see this is the chart of Bank Nifty. It underwent through, it is a range, but it was in an uptrend. See, it created a panic by gapping down. It was a liquidity grab. Later, after grabbing the liquidity, all the stop loss hunting, the market, see the move, how swiftly, how smoothly market has traded Bank Nifty to the high. It is it has broken the high, probably might have made new high in the market today. So success is marking the structural points. So you need to mark the structural points. See, I have marked points here by seeing all the structures. See, the market is in uptrend. This is again the chart of Nifty. I'm showing the Nifty. See, I've taken these lines. See, it is making higher high, higher low, high, low, and this is also higher highs. So this low. So since I have marked all those things, I was able to make out, even though there was a liquidity gapping down in the market, I was able to read when the market went to the 22,300 or 300 on odd level. I was able to see that it is making a higher low. So it was confirmed I was able to trade properly because of marking the structural points successfully before trading itself. You need to do that. You need to do that. If you start doing that, you will not have any panic. Today, even though there was a demonic activity, you could have traded properly in the market. You could have traded properly and you would have known the levels, even the option pricing levels also, you could have grabbed the exact price level so that your stop loss will be very minimum and you could have held the position, even with the strong whipsaws. So mark your structural points with highlighter tools. Actually, I use price notes. They are very simple. It's very easy. And if you, with the price notes, to identify the shift in market structure. So then trend is fully established only after 2 highs and 1 low. You should know that when a trend is established, there should be 2 consecutive highs and higher high and 1 low should be there. Then only trend will be established. So here it is the representation of the graphical representation of the market structure. See, market was coming down. See, it was making here lower high, and this is also lower high, and this level, this price action showed a reversal in the market, making a higher high. See, till that it was making a lower highs. It made an high and higher low and high, low, high. So trend structure. This is how you need to identify the market structure. Even if you make if you closely observe the price action properly, you can identify the market structure or shift in the market structure in the early. You can identify reversal in the market structure. Either it is in up towards the uptrend or either towards the downtrend. You can identify this thing. So for me, I use useful tool is price notes. See here, I've used the price notes for this low 22,306.9 is the price note. Okay, here market was coming down, gap down to 22,306. This is the market mapping of today's trade. Today's levels, Nifty level on intraday time frame, 15 minutes. See, it made a low of 22,306 and high of 22,364. See, this was a doji candle, and this candle, this price wicked above but closed inside. But for me, wick is also very important, showing a shift in the market structure by only 10 points, 22,374 points. So it confirmed me. So it confirmed that market is going to shift in them. So you could have taken trades so easily by keeping this low as your guideline, or this low, 22,306, you could have taken the trade. Sorry. And then it made an high, and you can see very early this candle was a doji, and next candle was inside bar candle, and it made a lower low. I have not marked with the price note. So if you carefully see that there was shift in the market behavior. So it was early signs of the shift in the market structure is early sign. So trend will be established only after that. But it started coming down so swiftly. See, if you see this price action, there is no break of the market structure. Though there was a shift in the market structure, there was no violation of the market structure because this low was 22,340, which was higher low when compared to the low of 22,306. And market rallied swiftly, fell into the range till 1 o'clock. And then the market started moving. It started making a trendy structure. You can see 22,465 and this low 22,389 gave away to the 22,465. Then you can mark this 22,389 to watch carefully whether this low is protected or not. Then when it is protected, when it made a 22,442, this high was confirmed and you could have traded by keeping stop loss of 22,389 till the shift in the market structure. While after 3 p.m. or something, actually you can see there was a shift in the market structure while closing. But it is not confirmed. Anything can happen tomorrow. But it is showing some profit booking towards the end of the day, and also today was a monthly expiry, probably all might have closed the positions. So major structure is your guidance. So for the major structure, you should have guidance from do not confuse with a minor substructure. Always zoom in your chart. Spot all the details. Major swing structure is it should be your guidance. Take note of consolidation on the higher time frame. Do not trade them on lower time frame than the 1 hour. So consolidation should not be traded below 1 hour time frame. When you see consolidation on the higher time frame, do not go for trading in the market. So that is the biggest mistake all the retailers are doing and losing the money. So if you start identifying all these things, you start doing this, start mapping the market, start marking the levels, then you see the amazing things happening in your trading. So you will gain an edge in your trading. So you can do wonders. Thank you very much, friends. Nandakshi Swami signing off.